last year we drilled about 20,000 meters. That 20,000 meters has given us 2 million ounce increase gold equivalent in the resource. So I can't think of many projects on the planet that you can get this sort of growth for $3 an ounce.
Welcome back to the Proactive Studio. Joining me now is Strickland Metals Managing Director Paul Lepinier to discuss the significant resource increases at its Rogozna project. Paul, good to see you.
Likewise, Jonathan.
So you've lifted the Shanac resource, some really strong numbers here, 15% increase in contained metal, 17% increase in contained gold, 38% increase in contained copper, 40% increase in contained zinc. The numbers are really good. Talk us through the work that got to those numbers and give us a bit of an explanation of those numbers themselves.
Yeah, so in terms of the work, obviously last year we put out a lot of really amazing drill results from Shanac. In fact, when we put the drill plan together for last year, it wasn't designed to grow the resource at all. It was really focused on trying to better delineate the high grade zones within the deposit, and which we knew were there, but the previous drilling was pretty broad, and so we needed to better understand where it was, why it was, and that's what we did. We only drilled 10 holes at Shanac last year to deliver this increase, so that's a really fantastic result. But probably the bit that I'm most pleased about was our strategy of targeting the high grade spots. Really seems to have paid off, because in the new model, at a 1.2 cutoff, we've actually got about 1.8 million ounce gold equivalent at a grade of about 1.8 gold equivalent. So to put that into perspective, in the previous model, we didn't have good definition of the higher grade zones at all. It had high grade blocks, but they were just all over the place. But now we've got a really nice coherent zone in the central domain. It's a few hundred meters long by about 150 meters wide, deep, and at least 20 to 50 meters wide. So that's really coming together really well, and that's the bit that I'm happiest about, because it's actually that stuff. It's that higher grade mineralisation which carries the deposit. It's a third of the metal in the deposit, and that's going to be the focus for the mining studies moving forward.
It's worth noting, I think, you've only had this project since, I think, July last year, so it's not even a year.
Yeah, so since July last year we drilled about 20,000 meters. That 20,000 meters has given us 2 million ounce increase gold equivalent in the resource. So I can't think of many projects on the planet that you can get this sort of growth for $3 an ounce. And that's really just a sign of probably two things. Number one, the geology. This is really thick zones of mineralisation, up to 500 meters thick in places, but generally 200 or 300 meters. And the second thing, I would reason why we're able to deliver it at such a low cost is, our team in Serbia is first rate, and they know, they've pulled all this stuff apart, with the targeting and figured out exactly where to drill. So kudos to them.
So just looking at that a little bit further, estimated 15,000 ounces of gold equivalent per vertical metre. How does that compare with similar bulk tonnage systems globally?
Yeah, look, that's in terms of bulk tonnage systems, that's on the higher end. Probably the closest analogy here in WA or Australia is probably something like Havieron, which Greatland Gold have got. But I'm pretty sure ours is still better than, on an ounce per vertical metre than that from memory. So look, that's really good. I mean, the key is really how much of that are you going to get in them, when you mine it. And that's what this project also gives, is that optionality. So if you're a larger company, happy to spend the capital, you can mine most of it. Or what we're sort of focusing on is, targeting just the best parts of it. So, that's the optionality we've got.
Yeah, it's a good one to have. 50,000 metre drill campaign you're conducting now. What can we expect to see through this campaign, and what is the growth potential?
Well, what we can expect to see, so it's going to be a little bit similar to last year, where it's, the drill program split between resource drilling and discovery drilling. So, in terms of this 50,000 meters, about 30,000 of that is dedicated to resource. That's spread across Shanac and predominantly Gradina. Gradina's got about 25,000 meters of that, and that's to deliver a maiden resource by the end of this year. Remembering Gradina is the most gold rich of the deposits. It's probably the highest grade of the four deposits, and we're really excited to try and get that into a maiden resource sort of by Q3, Q4. And then we've got 20,000 meters just on exploration. So we've got over 20 targets. This year we'll be focused on 4 or 5 of those targets. Really game-changing ones that could be significant for the project, stuff like Jezerska Reka, which is the porphyry target, Obradov Potok, which has a massive footprint similar to Medenovac scale. So those are the ones we're really keen on. And then sort of more proximal brownfield targets like Kotlovi, which we discovered last year, just 300 meters away from Medenovac. So, a nice balance between resource growth. And so what can we expect? We can expect some nice growth in resources towards the back end of this year. And, with a bit of luck, if the exploration gods are smiling on us again, hopefully 1 or 2 more discoveries.
So plenty to look forward to. And just finally, it's worth noting that you cashed up to do all this as well.
Yeah, we're still cashed up, still around 30 million cash in Northern Star shares in the kitty. So we've got no impediments. We've got blue sky ahead of us, and we're going to go pretty hard this year.
Paul, a lot to look forward to. Thanks for your time today.
Thanks, Jonathan.